In this video, I'm going to use fundamental analysis to show you why I believe Palantir stock has a pretty clear path to being a $100+ billion company. There's way too many YouTubers out there that just pump stocks, say the stock is gonna 10x, 20x, 50x, 100x, throw a number, throw an X after it. That's what the stock's gonna do apparently. And 2021 was a reality check for a lot of those investors because a lot of those stocks, instead of going, 2 or 3 or 4x, they went down significantly. And I'm not saying I'm immune to this. I definitely had a few stocks, Peloton, Beyond Meat, that got hurt badly this year. But with proper portfolio diversification, my portfolio is still pretty much at all-time highs. But anyways, that aside, in this video, I want to actually use Palantir's financials, fundamentals, statements from the company directly to lay out a case on why the stock is attractive today to me and why I think it can grow quite nicely over the next few years. So guys, hit the like button if you appreciate me actually using data to back up some of my claims here, and subscribe if you're brand new to the channel as well so you don't miss any new videos like this. So in this video, I'm going to keep things fairly straightforward so you guys can follow along. I'm going to use revenue growth for the company that the company is projected, and I'm also going to use free cash flow, and I'm going to use these two things together to determine what value the stock should have in a few years. From their most recent earnings in Q3, Palantir reported revenue just shy of $400 million, with year-to-date revenue of around $1.1 billion. Now, on this revenue for the quarter, the company posted adjusted free cash flow of $119 million, representing an adjusted free cash flow margin of 30%. This puts their year-to-date adjusted free cash flow to $320 million, which is up bigly from a negative number last year. And to double down, Palantir raised their full-year guidance for this year for adjusted free cash flow to $400 million plus, up from $300 million previously, so a massive 33% raise. So now keep these numbers in mind, write them down somewhere if you have to. And what you also may have noticed is that I use the word adjusted quite a few times, and that's because it is an adjusted number. The free cash flow that they report is adjusted for stock-based compensation, which many of us know is something that Palantir is heavily using to retain their employees. So we have a big assumption here that we're making when it comes to their free cash flow, and that is that their stock-based compensation will not continue growing at a rapid rate. I'm assuming that over the next, say, 4 years or so, it's going to remain relatively flat. It's still quite elevated, but it's going to make a smaller and smaller piece of the pie as their revenue and free cash flow numbers do grow. And eventually over time, say 10, 15, 20 years from now, it's going to be a fairly insignificant expense. That is what I believe. Now, the last thing to note for our calculations is that their guidance of 30% revenue plus year over year is what the company is looking for, and they predict that it's going to happen for the next 4 years, bringing us to 2025. They also give us an estimate for fiscal year 2021 revenue, so if we calculate adjusted free cash flow percent based on this revenue, it's around 26%. So 26% free cash flow is lower than the 30% that we saw this quarter. But, to be more conservative with our calculations and our outlook on the stock, for my calculations, I'm actually going to use a 26% free cash flow margin for the next few years. Also, we really need to talk about their revenue projection, which the company is very bold in saying 30% plus for the next 4 years. But, the type of company Palantir is, it uses data to make decisions, it uses analytics, all that kind of stuff. So if there's any company out there that you don't doubt when it comes to their future projections, it's probably Palantir. So I'm going to give them benefit of the doubt. I'm going to use 30% growth year over year for my projections. So great, we have the numbers outlined here. Let's start calculating things. We can see first, using some basic math and the assumptions we outlined, we can project what Palantir's revenue and, more importantly, their adjusted free cash flow will be by the end of 2025. We can see here that they should be pulling in well over $4 billion in revenue in 2025. And out of that, around $1.1 billion will be adjusted free cash flow. But next, stock-based compensation is a very real expense. We have to talk about that. We have to include that. Fine, I'll include that. Here we can see stock-based compensation accounted for $86 million in Q1 to Q3 2021. So let's assume that in Q4 they feel generous and give out a ton of shares again. You know, good old Alex Karp is Santa Claus here. So let's say for fiscal year 2021 they give away $120 million in stock-based comp. If we subtract that $120 million in stock-based comp every single year for the next few years, the company can still produce over $1 billion in actual free cash flow in 2025. So in my mind, there's a very clear case that Palantir will be producing over $4 billion in revenue and over $1 billion in actual free cash flow by the end of 2025. And remember, this is assuming 26% margins for free cash flow, not the 30% that we saw in their most recent quarter. So now comes the fun part, justifying a valuation. So Palantir isn't a pure SaaS business, but they have a very strong SaaS component, subscription component to the business. And for all intents and purposes, I consider it kind of in that SaaS realm. And if you look at other SaaS type companies, they typically command higher price to sales ratios. So what I think would be a fair comparison to project out Palantir's numbers is to look at a more mature SaaS type business, one that's been around for a while and one that's producing similar revenues and free cash flow today as to what Palantir is expected to produce in 2025, and then we can compare to see what kind of price sales actually makes sense. So I think ServiceNow is a really good comparison, and this year they are expected to pull in $5.87 billion in revenue, of which $1.8 billion is free cash flow, which is about 31%, and last year they actually pulled in $4.5 billion in revenue with around $1.3 billion in free cash flow, which is around 29%. So these numbers are actually very close to what we expect for Palantir in 2025. And now what we can do is look at the historical price of sales for ServiceNow to see what kind of valuation the market gives this sort of company. ServiceNow trades quite rich, currently sitting at an 18 price of sales, but it was in the 10 to 15 range prior to 2020. So I think we have our baseline now, so now let's start calculating things out. So I put in a range of price sales from around 10 to 20, and using 15 as our base case, we can potentially see a 72% upside by the end of 2025, which is equivalent to a 14.57% CAGR in the next 4 years. On the low end, we'd see around a 15% upside in 4 years, and on the higher end, it's around 129% upside potential in 4 years. So guys, to calculate all this out, we use fairly conservative numbers taken directly from management themselves. 30% revenue growth is what we're expecting to see, taken from management, and I think they're actually going to exceed that. And then on top of that, 26% free cash flow margin, which is what they expect to produce this year, but in the most recent quarter was actually 30%. And who knows, maybe over time they can actually sustain 30% on a full year basis. And then taking that and using a fairly base case here for Palantir stock, we can almost double our investment in 4 years. I know in this market it seems like that is absolutely terrible returns, but trust me, in a regular stock market, which is kind of what we're entering now, those returns are quite handsome. Okay, now just for fun, I calculated, using my more bullish assumptions, what did it look like? Well, here we can see how things drastically changed, with the base case of 15 price sales now returning 131% or 23% CAGR, and the high end of 20 price sales, which could very well still be the valuation Palantir sees in a few years, will return well over 200% return, or well over a $100 billion market cap. Now you may think Palantir, $100 billion is absolutely unrealistic, but if we look at ServiceNow, business is at a very similar point today. Granted, it does have more recurring revenues and all that kind of stuff, but they are fairly close comparisons in my opinion in terms of growth, which is actually slightly slower than Palantir, but very similar revenues and free cash flow margins. We can see that ServiceNow is actually a $128 billion company today, and that's higher than our most bullish assumption for Palantir, which landed at $117 billion market cap. So there's definitely a very viable path for this company to be valued well over $100 billion in a few years. Now, if the market realizes this even sooner, that could happen in a couple of years. I wouldn't put that past us. But just remember, this is more of a longer term plan, a company that's going to execute over a very long period of time. So you may not get those returns instantly, but eventually they will come, in my opinion. I think it's very likely Palantir even surpasses my most bullish scenario here, because the company is known to execute well, beat on estimates, beat on their own guidance, and keep raising guidance, and that is a very healthy sign for a fast-growing company. Their government segment is growing well, but that's not really the future here, in my opinion. I think it's that commercial segment that's just absolutely exploding. It's a fairly new business for them, so there's a lot of potential there for them to dominate over this next decade. But anyways, guys, all we can do as investors is just focus on the fundamentals here. Maybe the stock price declines even more. Maybe we see a massive rally sometime soon. Who knows? Stick to our fundamentals, stick to our analysis, stick to our thesis, and over time, good companies will reward us with a higher stock price. Anyways, guys, thank you so much for watching. Hope you enjoyed this video. If you did, hit the like button down below. Leave a comment what you think about my analysis here. Love to hear from you as always. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.